the treasury bills market witnessed bullish sentiments due to sustained levels of system liquidity. However, traders at Access Bank anticipate cautious trading today as investors focus on funding for the biweekly retail FX auction. Bosun Obembe, the money market trader at Access Bank, joins me now for more on the markets. Thank you so much for your time today, Bosun. We've had quite a busy week here. We've seen inflation figures came out this week. We've also saw the bond auction calendar also being released as well. But speak to what we're seeing driving sentiment in the market this week.
Good afternoon, and thank you for having me. So just like you mentioned, the major driver of the bullish trend that we witnessed in the market this week was the liquidity. So this week, the average liquidity has been over 300 billion. Yesterday, the liquidity, market liquidity was around 399 billion, and there are no significant funding activities that we witnessed this week. There was no bond auction, there was no NTB auction, but today we are having a retail auction where we expect a lot of liquidity to be taken out of the system through the auction and through the CRM maintenance that will happen today. So we expect a cautious trend today. And just like you mentioned, this week the major thing that came out was the bond auction calendar that came out, which indicate that government is ready to actually borrow a lot to fund the 2023 budget. Before now, we used to have like 3 majority on the auction, but this we have a 4 majority. We have a 2028 majority being taken out, 29 being brought in, and from the calendar we could see that DMO is ready to actually borrow about 360 billion as against the 225 they used to borrow at the previous auction. So, and we have FAC coming into the system next week, so it's going to be an interesting week in next week, coupled with the NTB auction coming up as well.
Yeah, because I was going to ask if you expect to see the momentum on liquidity being sustained for the rest of the month.
Yes, the momentum will be sustained. However, that will be a function of what is taken out of the system today via CRR and the retail auction. But regardless, we're expecting about 600 billion coming into the system through the FAC. If you notice, the FAC for this last month, actually it's like the highest that we've seen in like 12 months, about 999 billion coming into the system. With next week, the only thing we're having is the NTB auction. We have about 220 billion maturing, and it's a majority coming in, so we expect that this will be to be rollover. So really, no, it's not as if fresh liquidity is leaving the system, and nothing really happens next week until maybe the upper when we have the bond auction.
Yeah, but very quickly, I understand that on the bonds that the yields are a bit elevated, and how do you see this impacting the dynamics in the market? Real quick.
I think for the bond auction, the yields are not really at the elevated level. What we've seen is if the NTB space, the rate is trending down. What we've seen 1 year trading at 4.3% levels, and we expect even at next week auction the rate to come down lower. The last auction closed at 7.3, so we're looking at maybe 6% level or lower at this upcoming auction. So the only alternative investment vehicle for the for market participants happens to be the bond, which we are seeing double-digit 13 to 15% yield on the instrument we have there.